This is Gerardo Del Real for Outsider Club. Joining me from the New Orleans Investment Conference, CEO of Skyharbour Resources, Mr. Jordan Trimble.
Hi.
Jordan, thank you for joining us.
Thank you.
So, I'm a big proponent of a few things when I speculate or invest in a company. I'm a big fan of share structure. You've got to have long-term committed shareholders that know about the discovery process and allows that to play out. And jurisdictions matter. And we've seen a lot of that in the market lately where companies have a great asset, wrong place.
Yeah, no, absolutely. That's a big part of the uranium space too, right? So, what I look for and what I've been doing with Skyharbour, my team and I, we want to focus in a jurisdiction where we know we can go out there, we can make a discovery that's going to add value, that's going to create shareholder wealth, and the Athabasca Basin really is that jurisdiction in the uranium sector. You don't really have anything else out there like it. It's really a geological anomaly. You get these high-grade deposits, even in a declining commodity price environment as we've been in.
Sure.
For uranium, it's a contrarian pick. You can still see these significant, enormous returns for investors. We've seen that with NextGen, we've seen that with Fission, we've seen that with Alpha, and then they ended up selling to Fission. Saw that with Hathor, right? And that was a significant in a bear market. That the jurisdiction is key. Not only is it a complete geological anomaly, the highest grade uranium deposits in the world. We're talking on a magnitude of 10 to 20 times that of other jurisdictions, but it's also safe, right? It's a great place to work. Saskatchewan is one of the best places in the world. I've worked on projects and with companies with projects in all the provinces and a number of the states and down here in the U.S. And Saskatchewan is the best that I've worked in as far as geopolitics and you look at the First Nations there, right? The largest employer of the First Nations in Saskatchewan is Cameco, right? Cameco and Areva. So this is, these are key things, right? It's risky enough going out and looking for these deposits. You drill a hole, you're looking for high-grade mineralization, you're looking at, the big home run hit, right? And you don't want to have to worry about these other risks that are associated with it. So can't say enough about the jurisdiction. We're active there. We're going to be drilling here in January, a small program that we're just lining up right now. So that'll be a big catalyst for us coming up. Getting back to the project base, I want to highlight one thing that we've been able to do really over the last three and a half years is take advantage of this bear market, right? We've now accumulated 5 projects covering over 250,000 hectares of prospective land.
And that wouldn't have been possible without this bear market. So you talked about the contrarian play that uranium presents, right? And I think it's one of the more unique things about how you've approached this is you did a wonderful job during that downturn of assembling an amazing land package with some amazing people. And I know that's where you were headed, so I'm gonna let you
and you look at the value, right? You look at the valuation that we've been able to, get these projects at, less than $2.5 million in cash and stock. These 5 projects have had over $60 million invested in them. And at one point, the 2 main projects, Moore Lake, which is our flagship project, and Falcon Point, which we own 100% of, and it has a small NI 43-101 compliant uranium and thorium deposit on it. Those 2 projects were in my head geologist's company, JNR. They were in that company in the last bull run in uranium. And at one point, JNR was trading at a $350 million market cap with just those 2 projects.
What's your market cap at right now?
$12 million.
Exactly.
So this is the kind of discounts we're seeing right now. The contrarian opportunity that we're seeing. Needless to say, we believe it's going to turn around. Ultimately, we have the company poised to take advantage of that. There's a lot of junior uranium exploration companies that have fallen to the wayside. They're looking for other metals now, or they just are no longer around, right? So
exploration and development companies that are not exploring or developing.
Yeah, exactly. They're inactive. We've been opportunistic. We've found projects that other companies haven't been able to earn in on, or quite frankly haven't even been able to meet the requirements for the claims to be in good standing. You have to spend money on the claims. The projects that we have too, because there's been so much historical exploration on them for the most part, the claims are in good standing for many years out, and that's a key thing. You want to have this optionality with your project base. We have the 5 projects, as I talked about, the flagship being Moore Lake, but now with these 5 projects, with this asset base, we can actually employ a prospect generator model on the non-core assets, and that's something we're looking to do here over the next year, and that can bring in some cash for us to help fund further exploration without having to go back to the market. It also gets make sure work is done on those projects using other people's money or other companies' money.
Potential for maybe a home run.
Exactly.
With someone else's
absolutely,
money. Right?
Absolutely. And everyone knows the prospect generator model. I think it's a great model. We're looking to become that for the Athabasca Basin. But we also have the main catalyst, really, which is the drilling, the exploration we're carrying out at Moore Lake. And as I said, that being the flagship project, it's a project that's had a lot of historical exploration done on it. It was actually my head geologist, again, Rick Kazmersky with JNR, that made this initial high-grade discovery there at Moore Lake. It's called the Maverick Zone. You got 4% over 10 meters. Right. You got some really nice mineralization there, and most of it's at the unconformity. So here's what we're going to do. We're going to go in there and we're going to give it a new look. You look at some of these recent discoveries that have been made in the basin. It's basement hosted. It's below the unconformity or even outside of the sandstone, the Athabasca sandstone. So what we're going to do is go back in there. We will drill back into that high grade zone. We want to continue to prove up that zone. Work towards an initial resource estimate on it. Excellent. But we are going to be testing the basement rock below, which there was not a lot of drill testing done in that basement rock. We think there's the potential there for a significant, a large, high grade discovery in the basement rock. So that's what we'll be doing going forward. But I want to emphasize too, we're not going to go out and spend a ton of money drilling it in a difficult market. We're going to be prudent with the budget. I want to have it. I want to have the company in a situation to take advantage of the turnaround in the uranium market, and not like a lot of other companies, run out of money and not be able to survive. Right.
Sure. You talked about money, and shareholder base is a big deal for me when I look at a company. You have some of the most influential and well-known shareholders, financiers, long-term committed invested people. Can you share some of the details behind the shareholder base and how you were able to put such a prominent group together? Because it's pretty incredible
absolutely.
For a company with a $12 million market cap.
Yeah, so I mean, look, these are, the shareholder base, they understand the contrarian aspect of this, right? Of this company. I mean, we're going out there, we're being opportunistic in a difficult market. We do have catalysts coming up with the drilling, so that will generate some news flow and excitement around that. But they do see the uranium market in a bear market, and they're investing in a company that, like I said earlier, has the potential for, many multiple, a big multiple return going forward. And so, you look at the shareholder base, we just raised $2.47 million. Some of the larger participants in that financing, Marin Katuza in the KCR fund, he's my largest individual shareholder, Jeff Phillips, and we have Doug Casey. There's a couple of funds in Europe that own about 9.5%. And the insiders, I mean, we own just under 20%, right? So we have a lot of, have a lot of skin in the game. Our largest strategic shareholder is Denison Mines, right? So that's an important part of our story, is having one of the largest uranium development companies out there with the focus in the Athabasca Basin. They own about 12% of the company, and if you look at Lucas Lundin Company, obviously, and their president, CEO, a gentleman named David Cates, he's on our board as well, a shareholder as well. So very strong shareholder base, and also we've been putting together a team, bringing geologists and finance people and management together to build a team that can really stand the test of time for the long run, that has focused expertise in the Athabasca Basin. So my team in Saskatoon, led by my head geologist, Rick Kazmersky. Rick's a veteran, right? I mean, he's been doing this for over 40 years. He was with Cameco for about 15 years as a senior geologist there, and then he ran JNR, which he ended up selling to Denison. And now a couple of the projects that were in JNR's portfolio are now back in our project, or in our portfolio. So Rick is he's a seasoned vet with focused expertise in the basin. David Cates, who I talked about earlier, who's president and CEO of Denison Mines, he's on the board, working closely with their team. Myself, Jim Pettit, work together out of Vancouver. We run the corporate affairs for the company, do the capital raising, capital budget management, all that kind of stuff. And last but not least, Paul Matizik, right? He's come on as a strategic advisor for the company. He's a large shareholder of the company. He needs no introduction. He's built and sold 4 companies, including Energy Metals, which he took from a 10 million market cap in 2004, sold it to Uranium One for 1.8 billion. So he knows the uranium space. He knows the contrarian aspect of this company very, very well.
Well, it's a compelling opportunity. What can we expect from Skyharbour here in the next, let's say, 3 to 6 months?
Yeah.
You have multiple catalysts on the horizon.
We do. So First and foremost, the drill program coming up at Moore Lake. This is the project that we've acquired from Denison. Just did the deal, consummated the deal in the summer. So we'll be drilling there in January once it's frozen. It's a relatively shallow project too. I want to highlight that point because as we see in the basin, a lot of these higher grade deposits are deeper down. You look at Cigar and McArthur, the two producing mines there, and these are 500, 600, 700 meter deposits, right? So drilling them and proving up a resource, it can be quite costly, right? The Moore Lake project and the Maverick Zone, the high grade Maverick Zone's at about 260 meters, so half the depth, right? So that's important because A, it's easier to target, it's less costly, your risk, your drilling risk goes down, right? So we'll be drilling there. That'll be January, February, March. The good thing with uranium exploration is you get a pretty good indication early on of what you're hitting based off of the scintillometer results. And so we'll be having a lot of news flow out on that. And then going back to this prospect generator model, we are looking to complete a few deals on some of the non-core projects with strategic partners that can come in and explore those projects, value add those projects, again, without us having to go back to the market to raise more money to do that. And we have a pretty good portfolio. The other projects outside of Moore Lake, you got Falcon Point, we own 100% of. There's a small deposit there, uranium and thorium near surface. We did a little bit of drilling there last summer, some higher grade mineralization at depth. It also has one of the higher grade surface showings that's ever been found, 68% from a sample we took last November, actually, around this time. And then we have Man Lake, which is a project strategically located right just southwest of McArthur River, the largest uranium mine in the world, richest uranium mine in the world. And then on the west side, right? I mean, everyone's been focused on the next gen and the fissions of the world. We have one of the largest land packages over there, 50-50 joint venture with a partner company. We've done quite a bit of work. We actually had two other companies that were in a partnership, and they funded a $5 million program. So we have lots of targets there. These are all projects that would be perfect candidates to bring a partner in on.
Excellent. Well, sounds like a lot of catalysts. Exciting time at Skyharbour. And for everybody that's watching and listening, I would remind you that just this time last year, it was quiet on the precious metals front, and when it turned quickly.
Absolutely, and that's what I tell people. And just a kind of a quick synopsis of the uranium market. I mean, look, we've seen the price continue to decline, right? It's now trading at basically its all-time low in inflation-adjusted terms. But the interesting thing is, you look at that market right now, you've had excess supply that's hit the spot market. The spot market historically has been a relatively small amount of the total traded volume, right? So, the spot price can fluctuate, it's volatile, as we've seen. The long-term price, which is where the bulk of the material is actually traded, and utilities buying it at that price, we're still in the high 30s, low 40s in terms of that pricing for uranium. So I think there's going to be a bit of an arb there. I think you're going to see the spot price eventually tick back up. But the interesting thing on the demand side, right? You look at the next 5 years, the next 6 years, with the utilities companies having to come back, they're having to contract again. By 2023, you're going to have almost 80% of their requirements for the current reactor base. They're uncovered. There is no contract in place to cover them right now. So they're going to have to come back, and they're going to have to, they're going to have to renegotiate. They're going to have to enter into these new contracts, new contracting cycle. That's going to drive the price up. You also know that the secondary supply that's been hitting the market, and that's been the main reason the price, the spot price has been driven down so low. That ends eventually, right? I mean, there's only so much out there, and there's been more than I think anyone could have predicted. But again, it's created this unbelievable contrarian opportunity, both for shareholders buying shares in uranium companies, but also for the companies being able to acquire projects and put together a team, right? Some of the best geologists and technical people out there in the uranium space are available, right? Because the market's been that difficult. So, this is, it's a real interesting opportunity. We're in it for the long haul here. Ultimately we want to make that next big discovery. We want to get, someone to come in and ultimately buy the company, as most exploration companies do. And we will stand the test of time with this. We're moving forward. We have a lot on the horizon, a lot of catalysts coming up. As I say, the icing on the cake will be when that uranium price starts ticking up. And I see that happening sooner than later.
Excellent. Well, it's called being a contrarian for a reason.
Absolutely.
Jordan, thank you, sir.
Thank you.
Appreciate your time.
Thank you.
All right.
Thanks.